How's it going, everyone? In this video, I'm going to walk you through a huge trade we caught on SPY today. But before we get started, as always, be sure to subscribe to my channel, click that thumbs up button, click that bell icon so you do not miss on any of my upcoming videos. Let's get right into this. So you can see I've got SPY pulled up and SPX. I'm always watching these two together when trading SPY. The trade we caught was right here. Got in at the very tip of this candle. My pre-market watch list had a 418.85 reject area that hit right off the open. I missed this trade. It hit. It did well. But so what I wanted to see now, I said, okay, I see another trade setting up. I told everyone inside Team Bull this. I said, you should have your 419 puts pulled up and ready in case this confirms. Now let's look at SPX. Opening 5-minute candle. This is a candle we took the trade off of come up. I was watching the 4195 reject on SPX. This was the same levels I gave you on my weekly watch list. I post every Sunday on YouTube. Well, I dropped this one on Monday just because of the long weekend. But we entered puts here. What I really liked about that trade, we did not have a huge increase in buying volume. If you come down here, a little increase, not a huge increase, and you could immediately see the selling volume coming in. So we got in here with puts, caught this move all the way back down. I exited my runners here. Yes, we did leave some on the table, but I'm very happy with our execution on this trade. Well over 80% trade, depending on which contracts you had. Now, you're probably wondering, like, what made me choose the 419 puts? Because this trade was approaching, and if you trade SPY, there's typically really good liquidity. Prefer to trade at the money strikes if possible. So I said, okay, if we push up to this key level I'm watching, the 419 strikes will be what I should go with. As you can see there, it was right at the money. I was trading same day expiration, got in, caught the big move down. I have a lot of people, ask me, like, why do you trade at the money strikes? One, because you have a good delta, you're getting a good return. Two, if you trade in the money, you're going to be paying more premium. You're going to have more money on the line. The delta is going to be higher, yes. Okay. But if it goes against you, the higher delta at that point, with that much premium on the line, it's going to add more risk. That's how I feel about it. And I have people ask me about out of the money. I don't like trading out of the money when I'm day trading because the delta is so low. So if we're trading 416 put options for this move up here, chances are it's gonna have to move a ton for us to have a good, return. For me, a good delta would be roughly, if I had to put a number on it, 30 plus. I believe that's a fair number. And if you do not understand the Greeks or how options work, remember, I do have a YouTube video that is like a literally me teaching an options class live. So take advantage of that. And that's all I have for this video. I appreciate you all for watching, and I will see you next time.